Hi, friends. Good evening, good morning, good wherever you are, whenever you are right now. This video is in response to something that I saw on Threads, which is a platform that I don't typically visit or participate on, but it seems to be gaining some momentum and it keeps popping up in my Instagram feed and people are sharing things from Threads. So I finally got on there and I was like, okay, what's really happening over here? And one of the very first things that I saw was a post that said, the bookkeeping and CPA industry is broken. And the comments underneath it were horror stories, ghosting and being overcharged and bookkeepers not filing things or missing deadlines and five-figure surprises. And honestly, some of those stories are probably very real. So today I want to talk about this. It's important. And I want to talk about this not from a reactive place, being that I am in this so-called broken industry, and not from a defensive place, but from a grounded professional one, because there are always two sides to the story, right? Well, some people would say there are three sides to the story, yours, mine, and the truth. But I'm going to tell you kind of I think why I was seeing these kinds of comments. So we're going to talk about how to know when it's time to find a new bookkeeper and how to do it without panicking. So on that post, I read stories about retirement contributions not being processed for an entire year, 1099s not being filed, which if you've watched any of my videos prior to this, then you know that that has very steep financial penalties from the IRS. Tax amendments that were never submitted, bills left unpaid, bookkeeping teams going completely silent on the client, people paying hundreds of dollars a month and still feeling unsupported. And if that has happened to you, I'm sorry. You're not being overly sensitive. That's really, really stressful. And it's wrong. It creates anxiety and mistrust and a really awful feeling in your stomach because you know that something isn't right. But here's what most business owners don't understand, or because they don't know, and what most finance professionals are likely not going to say out loud. So I'll be the black sheep of the industry here. The industry is not broken, but expectations, communication, and engagement letters often are. Every bookkeeping relationship should start with a very clear engagement letter. What's included? What's not included? Who handles payroll? Who files 1099s? Who tracks retirement contributions? Who handles state registrations? Who communicates with your CPA? If these things are not clearly defined, then resentment builds quietly. And confusion like this always turns into conflict eventually. Scope creep is real, and it happens constantly in bookkeeping. If you've never heard the term scope creep, it's essentially when whatever you agreed on in the beginning of your engagement ends up being way more than what you signed up for. So like over time, a client might ask you, oh, can you just do this? And oh, can you just like be in charge of filing these or of, storing these receipts? Or, oh, can you just go ahead and add in a cash flow report here and there? And so things get added on to the engagement that you hadn't anticipated. And I do want to make something very clear. A bookkeeper reconciling your accounts and producing reports is recording what already happened. That is different from forward-thinking financial strategy, like cash flow forecasting, pricing strategy, tax planning, profit modeling. long-term growth planning. All of that is CFO level advisory. And that is a different skill set. It's a different focus and usually a different fee. When someone expects forward-thinking strategy, but is only paying for historical bookkeeping, frustration builds on both sides, right? Strategy is not free, and it shouldn't be. Another thing happening in this industry, experienced professionals are retiring faster than new ones are entering. And some firms are scaling faster than their infrastructure can support. That is definitely happening. Growth without infrastructure hurts clients. You might be feeling that. The people in that comment thread might be feeling that. If someone is taking on more clients than they have systems, team support, and oversight for, then the quality drops. And clients feel that. So how do you know if it's actually time to find someone new? You might need a new bookkeeper if you don't know what you're paying for. If you never signed a clear engagement letter, if you don't receive consistent financial reports, if you feel afraid to ask questions, if you discover missed filings or deadlines, if you don't have full access to your own accounts, if you constantly feel uncertain about your numbers. But don't panic switch because of one uncomfortable conversation. Sometimes it's a clarity issue. Sometimes it's a scope issue, and sometimes it's a communication issue, and all of those can be fixed, right? So a strong bookkeeping relationship should feel steady to you. You should have a written engagement letter, clear deliverables, defined communication timelines, clear ownership of responsibilities, transparent pricing, and proactive updates. You should know exactly what's being done, when it's being done, and what's outside the scope. Boundaries in business are not cold, they're protective. When expectations are clear on both sides, trust grows. If you're feeling uneasy about your current setup, start with your engagement letter. If you don't have one, that's your first red flag. But if after reviewing your engagement letter, if you do have one, and clarifying scope and having a direct conversation, if you then decide that it's time to move on, don't leave in chaos. Transition well. Before you switch to a new bookkeeper, here's what you want in place, okay? You want to make sure your books are up to date. Ask your current bookkeeper to complete all reconciliations through the most recent month. That means your bank accounts, your credit cards, your loans, your payroll liabilities, and sales tax accounts. Those should all match their statements. You do not want to inherit unfinished work. That means a huge cleanup, and cleanups are messy and they take a long time and they're very expensive if you have to get somebody else to do it. You want to make sure, you want to confirm that you have full access. So make sure you have direct access to your accounting software, your payroll system, your bank feeds, your merchant accounts, any connected apps. The logins should be in your name or your business name, not your bookkeeper's personal email. And just so you know, a lot of firms will own the account in the accounting software, but then it should be in writing in your engagement letter that if you are to terminate your contract, that they will release that to you. So make sure that is in writing and that that's in place before you go, okay? You want to request key reports from them. Get copies of your profit and loss statement, your balance sheet, your accounts receivable aging, and your accounts payable aging, and save those reports. You want to clarify outstanding items. Ask if there are any unresolved issues like unreconciled accounts, unpaid invoices, missing receipts, pending tax deadlines, state filings. It is so much easier to address those things while your current bookkeeper is still available. You want to create a clear transition date. So decide on your current bookkeeper's last day of service and the date when the new bookkeeper begins. And if it's possible, allow for a short overlap period in case there are questions. You might not have a bookkeeper currently who is willing to do that, but if you do, it's going to make things so much easier. So it's worth asking. You want to review your processes. So what do I mean by this? I mean, use this opportunity of switching to someone new as an opportunity to evaluate your systems. Currently, are your reports easy to understand? Are they in the format that you like to see them? Are you receiving updates regularly? If that's important to you, then you need to make sure that that's what the new person is going to be doing. Do you feel clear on your cash flow? If your new person doesn't offer cash flow in their basic package, ask them if they will make it an add-on service for you. A transition can be a chance to upgrade, not just replace. You also want to find someone before the time gap gets too big. The longer you wait, the more disruption your business experiences. Financial continuity matters. So I created something to help with this. It's a financial clarity evaluation guide. It walks you through how to evaluate your bookkeeping structure before making a final decision. So start there. Clarity always comes before change. And if you want a second set of eyes on your structure, I will link below to how you can have a clarity review session with me. So just remember that familiar is not the same as functional. Just because you've worked with someone for years doesn't automatically mean the structure is still serving your business. Sometimes we stay in situations that feel comfortable, even when they're quietly costing us clarity or more money than they should be. Longevity does not equal alignment, and comfort does not equal clarity. Business is hard enough. Your financial team should make it feel clearer, not heavier. So that's all I've got for this one. That's my soapbox after seeing the thread post that said that my industry is broken. It's not, guys. It's just, it's communication. So let me know if I can answer any questions for you. Check out that financial clarity evaluation guide, and I hope it helps. Okay, I will see you in the next one. Bye.